Welcome, everybody. It's Pup's Office Hours, July 20th, and we are in the midst of earnings season. But before we get to that, a little bit about myself. I am a full-time swing trader that also day trades, and this is my office hours. I run this office hours for my members exclusively. Generally, we run about 75 minutes. Today, we're going to have to cut it a little short. But we're going to be reviewing the market. We'll talk about some process. We'll look at charts. We'll do a Q&A. We'll do a chart request. And yeah, I'm using TrendSpider to do all of my charting. I do black box using for options, flow, and my dark pool data, and then TradeEtics for algo trading. And if you're not a member of my platform, I do offer a variety of things. Daily setups, daily swing trade setups. I haven't updated this, but recently in the last, let's say 3 weeks, I'm now doing day trading levels. I do it on a 30-minute chart to give you the levels, the key levels that I'm watching for. That's going to be, right now, I believe I have about 10 tickers charted out, including SPY and the Qs. And as time goes on, I'll continue to add more. These levels are pretty good, and it's what I use pretty much to day trade. You also get my 10 long-term conviction stocks that I update weekly on the weekly chart, and access to my TrendSpider scans and watch lists, and also my trading rules and documents. Rules are important, especially trading in this bear market. You get chart requests. You get these bi-weekly office hours that I run on Wednesdays, as well as my weekend video going into the next week, where I'll review usually my top 10 to 12 charts. But lately it's been more because, we'll talk about that, but the market has been running and we're in a really nice bear market rally here. So, and I also have my executive plan, which includes one-on-one calls with you. So bear with me while I get to the next section here. So let me get this up and going. So let's talk for a second before we dig into these charts. So yeah, the dollar is dropping. We're in earnings season, as I mentioned. Earnings season started last week officially with banks reporting, and it actually started off not so great. And then here comes Monday, and stock's been running, right? So far, so good in earnings, although I will say we haven't had really that big of an earnings push yet. Tesla was the first to report. We'll talk about that chart in a little bit. A little bit of a nothing burger in terms of a move. Tomorrow, we'll get a little full understanding of what may happen to Tesla, but looks like a premium killing day tomorrow for Tesla. And yeah, last week I was talking about semiconductors. I said that was going to be my top watch going into this week. And man, oh man, AMD and NVIDIA and the rest of the semiconductor market have been on a roll. So that was really good. What else? Looking at a lot of the stocks, the growth stocks, the tech stocks, a lot of them are down 50%, 70%. Bottoms look like they're forming, but bear in mind, we are still, no pun intended, we are still in a bear market. But these trades to the upside, they are absolutely tradable. You just have to be very disciplined. You have to apply risk management to your trades. These moves are very aggressive. They do happen pretty fast. So you have to be on your charts. You have to make sure you're setting your alerts. And if you're taking the trades, make sure you're setting stop losses, because, the market is still fragile. The macro environment has not changed. It's a very, very complex environment. And from traders that I've been speaking to that have, 15, 20 years experience trading full time, this is a market that they haven't even seen. So it just goes to show you that the market is the forever teacher, and we have to be the student. We have to watch day in, day out, observe price action, and take the trades that make the most sense to us. So As always, I'm going to go through these charts and let's just start with SPY. So we're going to be charting on the daily time frame. Your red line is going to be your 200 SMA. Your blue line is going to be your 50 SMA. So yeah, I think really positive sign today. Yesterday, we did break and hold over the 50 simple moving average. Today, we did back test, right? 393 and the 50 SMA. And we closed through, 390. And then we closed through 393.89. So very, very positive sign for the market here. You could see if I turn my gap snake on, my gap detector, you can see that we're pushing or starting to push into a gap here on SPY. So to me, what this says is Thursday and Friday could actually be pretty good days. We could get continuations off of this bear market rally. And what that would look like is SPY potentially testing 400, maybe as high as 401, 402. So yeah, it's really positive momentum here. Very clear 1, 2, 3, 4, 5 wave down. What I'd be watching for, ABC rally to the upside. We got our A wave. Looks like we might have got our B wave. And this potentially could be our C wave. So we could extend the C wave all the way up to 415. I think we have to take it one day at a time, but that's what I would be watching for. If we can break through 405, I think the likelihood of 415 coming is very good. And then we watch and we wait. We got the 200 SMA up above at 434, but we have all of this resistance and supply at 415. The other thing I'm noting here is we got a 3-dot squeeze setting up and we broke 50 on RSI on the daily chart. So this is a very, very good setup here for SPY. Again, I just want to see, do we get that continuation? Taking a look at the Qs, very similar story. Wave 1, 2, 3, 4, 5. We can probably just move that right here now. It didn't quite hit my target zone, but these zones, they are what they are, right? They're a zone. They're not a hard level. And so sometimes the fibs tell you the truth, and sometimes they fib a little bit, right? They fib, get it? Oh man, I'm terrible with these puns today. It just comes natural to me. I mean, the bear market one, the fib one. In any event, another squeeze setting up, another break of 50 here, and A, B, C, right? So what I'm watching for, 309, potentially up to 314. If we get over 314, then we're going to take a run at this 200 SMA to the upside. If we fail at 310, maybe 315 or 314, we'll likely come back down to the 50 SMA. And again, we broke out of that 50 SMA yesterday, and we continued through and closed a little bit of a gap today. So very strong price action here on the indices, which means the underlying are moving. Taking a look at IWM, similar story in a sense that we are rallying, but this is definitely the weaker of the three indices. But again, TTM squeeze setting up with rising momentum, a break of 50 on RSI. We're just coming up to that COVID low anchored VWAP, which is right at the top of our channel here. So really, it's very interesting where we are in this market. We certainly can rally another couple of days, even into next week. But next week is going to be, I think, the deciding factor, because we have so many stocks that are going to be, producing their earnings next week. I think that's what's going to really rattle the market. And again, it could be a catalyst to continue the push to the upside, or maybe a moment of pause and potential consolidation and or a move back down. So for now, we trade what's in front of us, and what's in front of us is a rising market with a falling volatility index. And so that's really good for the market. And in fact, I really should be adding this on to my charts, but the dollar index is also falling. And so although we saw a little bit of a spike, we had a run all the way up to the top of the channel here to our 200% extension at 108.84. And now we fell for the last 3 days outside of today. What is that? Friday, Monday, and Tuesday. And then today, not an inside day, but just a bounce off that center channel. So even the dollar index is giving us a signal that, maybe take a little risk off, or put a little risk on, I should say, and trade this market to the upside. But remember, you always have to remind yourself, this is a bear market rally. Nothing has changed in the macro environment. There's still a war going on. There's still supply chain issues. Inflation is still out of control. Interest rates are still going to go up. So this is still an environment that we have to be very, very cautious. So now that we've talked about the main indices, let's talk a little bit about the sectors that I like right now that are showing some really good relative strength. So let me go up to my session chart, and you can see here's the semiconductors, TSM, NVIDIA, Qualcomm, AMD. Again, mentioned this last week, showing relative strength. TTM squeeze did fire off yesterday. We got a continuation today. We broke through this downturn trend line right here. We have a beautiful gap right above. I think we have room up to 242 on the semiconductors on SMH in the coming weeks. So keep a close eye on your semiconductors. Here's a sector that, listen, I don't really love it, but I can't deny that, airlines have been moving. Delta Airlines, Love, Spirit, United Airlines, American Airlines, right? Bullish hidden divergence here. Falling price, rising RSI. We got a slingshot squeeze setting up. We came right into that 50 SMA. If we break through that 50 SMA, then you need to start digging into these names and seeing which one is offering the best setups right now. Here's IBUY. These are your online retailers. Booking Holdings, Expedia, Airbnb, Groupon, and Amazon. Broke through the 50 SMA yesterday, continuation today. Watch $50. We break above $50 and the sector is going to start to break out. XLY, this is your consumer discretionary, right? Amazon, Tesla, these two make up about 35% of this index. So it's a little bit skewed, but keep an eye on the consumer discretionary. This is also a very good signal for the market. We false breakout on Monday, true breakout on Tuesday. We closed the gap on Wednesday. We came right up to our 236 Fibonacci retracement at 152.52. We also had a TTM squeeze fire today. So very bullish sign right here for XLY. And although not an index, this is the United States Natural Gas Fund. It was actually a trade alert that was put out this morning for a break over 25.40. Got that breakout this morning, pushed right off that 50 SMA, hit our first target at 27.20. Our next target is going to be 28.68. In this, in this environment, in this kind of move, 7% move today, I would absolutely be moving my stops to break even here. I think that's going to be really important moving forward. Whenever you have a big day, 5%, 7%, 10%, move those stops up to break even. Start locking in some of that profit because you don't want this market to roll over and then your profits, disappear. So just make sure that you're moving your stops up as these trades progress. Let's start talking about some individual names. First, let's go over the trade alerts that have gone out this month. This is Jinko Solar. This trade alert was on 7/7 for a breakout of 68.87. You can see we did get that breakout. We hit our first target of 77.45 and then it reversed. Again, you have to be locking in profit. You have to be moving these stops to break even. So right now, we fell right back down to that 50. What I would watch for, do we base along the 50 and start to make a move back up? You can re-enter the trade off of this 50 simple moving average. You just have to watch 68.87. I think, next time we come into it, it definitely will provide a bit of resistance. And he breaks back over 68.87, and we could see him move back up to 77.45. Now, TAN, which is the ETF for solar, does look pretty good. And we'll talk about ENPH a little later, but ENPH is looking really good. So we'll talk about that in a moment. Next up is OXY. So I did put out a trade alert on 7/8 for a break over 63.08. We did fail on that breakout initially right here. This was the day that the trade alert went out. We came back down, and now we came back up, and we broke through that 50 simple moving average, and that trade triggered today through 63.08. So next target is going to be 64.96, 67.22, and then potentially up to 72.37. We also have a beautiful squeeze setting up right here that has not fired off. So I would expect this potentially to fire off in the next couple of days, but do keep in mind, we have earnings on August 2nd. I'm in the camp of not holding through earnings unless you have one of two things, at least 10% of profit or more than the measured move that's the expected move for that. You want to make sure that you have enough profit to cushion and warrant holding through earnings. All right, let's look at CEIX. This is a coal play, and the trade alert went out over 57.82. You could see we broke out here on that day. This is why you wait for that daily close. You can take the trade intraday. You just got to make sure that you're closing over that level. We did not. And so what happened the next day? It reversed yesterday. And then today, put in a nice hammer. So this trade alert is still live. I want to see that close through 57.82. And next one is going to be Crispr. So biotech has definitely shown some good relative strength. You could see we broke through that the 200 simple moving average, which was in line with that downtrend line. We had a nice move up to that 236 retracement at 84.18, and we are just unable to break through that level. So again, false breakout on Monday, false breakout today, but closed under. This is why we wait for that daily close. Keep in mind, we do have earnings on August 1st, so that's early next week. So this one, we might need to wait until after earnings. If we gap above our trigger, watch for a back test gap fill, or we slap an anchored VWAP right on that gap up candle, and then let that guide us if we can take the trade. But rest assured, I will guide us all through that trade when we get there. Last trade alert that's gone out was Li Auto. We've been talking about this on my spaces for a little bit now, and it just it took a nasty downtrend. What was that? Yesterday. So the alert went out on yesterday actually, and it came up to near the top of the flag and then just came right back down and didn't really like the close that we got today. I would say if we don't get a close over 36.90 in the next couple of days, or I would say at the very latest by early next week, I'll probably take this trade off the table. A couple of things, we're coming right back down to 50 RSI, and we're getting a squeeze set up to the downside. Now, these squeeze setups that start to the downside, they can round up and come and turn into a slingshot squeeze, but I'd want to probably wait a week for that to happen. So this is still a bullish setup, right? Beautiful move up to $40, and now we're flagging. So we just might need to be a little more patient on this trade, but I will keep an eye on it. So those are the trade alerts that have gone out in the last 2 weeks. Let's take a look at some relative strength names that I've had my eye on for the last week or so. So first up is Datadog. So this is obviously one of my long-term conviction plays. We had a nice push through that 50 SMA today. 109.88 has been a really tough level. So we can take a trade through 100 up to 110, but really 110 is going to be the big trigger. Look at all of these daily candles here and here from May to June that failed at 109.88. So really we got to wait for 110. We get that break over 110, and then we could see a move back up to that 200 SMA right at around this target of 136.28. But keep in mind, we do have earnings next week on August 4th. Next up is Snow. Again, breaking the downtrend line, holding over that 50 SMA. Look at the breakthrough, the 50 SMA. We hit that target right here at 164.60, and look at how it back tested at 50, and it's starting to flatten out. We also went right back into a squeeze, and look at how it's basing over 50 here on RSI. So, excuse me, this is a good sign. What I would watch and wait for is 164.60. If we get a break over 164.60, you can see, let me grab my little drawing tool here. Look at how it acted as support back here, and then it acted as resistance here, and acted as resistance here. So when we get that breakout, we should have a nice move right to 179.64. And then over 179.64, 200, and then 222 would be my targets to the upside. But yeah, I mean, this one looks pretty good. I just want to get that close over 164. But of course, keep in mind, we have earnings August 24th. So we've got a lot more time for snow. Just about a month. So yeah, I mean, I think if we get that breakout this week or next week, this could be a good short-term trade up to 180, possibly up to 200 before earnings. Next up is NVIDIA. So again, we've been talking about semiconductors. I highlighted them last week. Yesterday, we got a TTM squeeze fire. Today, we got a continuation. Squeeze fired right on the breakout of the 50. Today, big move. I did take some day trades on NVIDIA today through yesterday's high. That was like 170. It took the 175 Cs. Those paid pretty well. And we closed through that 236 retracement from this prior swing high. So this leg down. So what I'm expecting here is a move back up to 197, maybe up to 200. We'll probably see a good amount of resistance off that level. But yeah, something else that I like to point out, when you see these breakouts over the 50 SMA with the 200 above, they tend to be good risk to reward trades if you catch it right over the 50. You could enter the trade right over the 50. You could always target, always put your fibs in, but you can target 200 and then use that 50 as a stop loss. And then as your trade progresses, just, keep moving your stop losses up. If you don't know where to place your stop loss, I like to use an ATR. So you could see the ATR here, the ATR trailing stop, it actually flipped. So here you could see how it's acting as resistance. So if you were shorting it, this is your short stop loss. But now we've flipped. That ATR has flipped. And so now this is what is going to be your new stop loss to the downside. So just a little bit of a tip there on using ATR as a stop loss. Here's Mara. So, wow, what a move. What a move. I mean, so Bitcoin obviously went nuts over the weekend. And so Mara made an initial move, made a 68% move about 2.5, 3 weeks ago. And then this week or last week into this week, it's made another 100% move. So this one is pretty crazy. This is certainly not something I'm going to put a trade alert out on because it's just a wild trade. But watch this trade through the trend line. I think over $15, this can move up to $20 really, really quickly, right? So you have, let's see, this zone right here between 1957 and $22. If we get this break over $15, I think there's definitely a trade here to $20 and then potentially up to $27.73. And really what you should be doing if you like these types of trades, the Maras, the Riots, the Coinbases of the world, just watch Bitcoin. Watch Bitcoin and just observe its price action. When Bitcoin goes up, these names go up. When Bitcoin goes down, these names go down. All right, let's look at Amazon. This one is definitely much more tricky to trade post-split. And but today, big move, really big move. This was the other name that I took a trade on today. I was really watching 4 names. I was watching Apple, Tesla, Amazon, and NVIDIA. But really, NVIDIA was my top target, just knowing, what really set me off too with these semiconductors, not to get off the topic real quick, but Nancy Pelosi's husband made that big order in NVIDIA last week. And that's almost like an inside sign. Whenever you see the Pelosi's buying, you should pay attention to what they're buying because they have inside information. And it's crazy that that's the market we're working in right now. But, look at the results that we're getting. Even though I think Mitch McConnell came out yesterday and said that he's not going to vote on the chip bill, this is still going up. So just keep a close eye on the Pelosi signal, so to speak. But here on Amazon, 124.08 is what I'm watching. Keep in mind, we do have earnings on the 28th. So I guess that is what? That's next Thursday. So yeah, just keep a close eye on Amazon. It looks like we're getting a pre-earnings run here. Here's the other chip name that I really like, AMD. big move off of this 1382 extension to the downside, 71.56. We did get that daily close over the 50 simple moving average. So this one looks like it wants to go back to 100. We're going to hit probably 96 to 98 before we get there. That's going to be right around this down channel. And then we do have earnings on August 2nd, which is not this coming Tuesday, but the following Tuesday. So plenty of time for AMD to make a bit of a run here. So next up is Tesla. Let me turn on after hours here. So it looks like we made a run right up to 773 and we got rejected. That was before guidance came out. That was on the initial numbers. So they also reported that they sold 75% of their stake in Bitcoin. So take with that what you will. I don't know what that really means to the bottom line, but suffice to say, you know, we're still stuck in a range. Looks like it's going to be a premium killing day for Tesla tomorrow. But if we hold over 745, I think we could see a move back up to 773 and then potentially up to 800. If we fail at 745, then I would expect a move potentially back down to 700. So keeping a close eye on Tesla for the rest of this week. Here's HD. I wanted to highlight this. It's not a name I normally talk about, but we did break and hold over $300 today. So I like my round number type of trades. So got that breakout today. Actually, let me say yesterday, we closed at 353 cents. So we actually got the breakout yesterday. Continuation today. Watch 308.41. We're already fired in our squeeze, but a break over 308.41, you can probably catch another 9 points to the upside to 317. And again, look at the break over the 50 simple moving average. Look at price, how price has accelerated through that. We are potentially going to make a move up to that 200 simple moving average. So keep a close eye on that. Here's ENPH. Been talking about this one for months now, right? Back in May 27th, put a trade idea over 179. It has been a wild ride, but if you've held on, you know, how many back tests did we get on this 179 level? You know, a bunch. And every time we get that back test, it goes right up to 218 and then comes right back down, right back up to 218. So we have earnings on the 26th, which is next Tuesday. So I wouldn't be taking any more trades on this, but I'm certainly going to be watching what it does on earnings. Now, if you're holding since the entry on 179, you've got about 20% on the trade. Now, everybody has to determine their own risk profile and their own risk tolerance, but for me, I'm holding through earnings with a 20% cushion. You know, I don't know what the expected move is. I don't think it's going to be 20%. So I'm going to hold through. I will watch it and observe price action when the numbers come out. But if we get a breakthrough 218.50, I think we've got a pretty good shot of making a run at 250, right? 246, 250 to the upside. So keep a close eye on ENPH. And then last but not least, I put this one out, I think 2 weeks ago, that SOFI was coming up against their downtrend line. This at one point was a long-term conviction hold for me. It just obviously completely fell apart. So I had to take it off the list, but it's still certainly something I'm looking at. And now we're 2 days over that 50 simple moving average with earnings coming out on the 2nd of August, which will be 2 Tuesdays from today. And yeah, I would expect if we continue to hold that 50, we can make a move back up to 1178. Let's take a quick look at what the fibs are saying that level might be. That's going to be looking at 941 for the 236 and 1225 for the 382. So still got a little ways to go, and that's percentage-wise, that's a pretty decent move, right? 36% to that fib and about 70% to the 200 SMA. But in these bear markets, we can get really, really fast rallies. So that's why I'm observing these stocks, because they're not necessarily long-term trades for me, but they could be short to medium-term swings. So again, with the right risk management, with the right, stop loss placed, I think these are all very tradable. So that wraps up the names that I was planning to go over. I already see some chart requests coming in. So if you have any other chart requests or any questions, feel free to drop them in the chat now. I do have an engagement that I need to go to at 8 o'clock. So I'm going to wrap it up no later than quarter two. So we've got 15 minutes. So I'll start going through some of these charts. And if you have any other chart requests or any specific questions, feel free to drop them in the chat. So let's take a look at ARKK. I haven't looked at this one in a while. And let's just do some quick fib work here. So there's two fib ranges that I'm going to be watching. It's going to watch that. And then we'll watch this fib zone right here. So let me change the color on that. We'll just make that orange is too bright. Let's make that purple. All right. So yeah, so it looks like we broke out of the 50 simple moving average here back on the 5th, and we came back and we back tested that 50 about 4 days in a row. And now we're coming back over that. Let's zoom in a little bit. And you can see we're in a little bit of a supply zone or demand zone, I should say, and we're getting above that demand zone. And so now that we've broken through 40, let's call it 47.23, this is looking like a decent trade to the upside. I think your first area of resistance will be probably, oh, you're right. I didn't miss something. Yeah, I'll go over Oxy in a second. Sure, certainly. I think your target to the upside is going to be 52.42. You can see how that acted as resistance, or excuse me, it acted as support right here and acted as resistance right here. So I would expect to move back up to 52.33. If we break above that, I think 58.89 will likely be your next stop. Yeah, I mean, this one's really beaten down, really beaten down. So I'm surprised it's taken this long for some life to come back into it. You just have to be careful, you know, watch your channels here. We came right into that center channel. So top of the channel over the next week could look like 56.60, depending on how quickly it moves. Keep an eye on the underlying, how much earnings are going to affect the underlying. And looks like we got a 3-dot squeeze with neutral momentum. Looks like momentum ticked up a little bit today. So it looks okay. It looks okay. And listen, even taking a trade here through 47.23 and using a stop, maybe $1 underneath, I don't think that's a bad trade. I think, you know, manage your risk properly, and I think this could be a good trade. Shopify, I've been talking about this one. It's really range bound. It's a tough trade right now. You could see between basically $30 and $40, it's just stuck. You know, I don't think you see a bigger move until we break out of this range. That's probably looking closer to like maybe $41. I would say 40.75 if you want a closer number. Keep in mind, we do have earnings on the 27th. So that's a week from today. That's next Wednesday. So yeah, I mean, if we get positive earnings, and listen, I love the company. I love the product. I love what they do. It's just absolutely beaten down. So, you know, depending on your time horizon, it's not a bad entry if we get that break over 40.75 for a long-term entry. But, you know, these would be the levels up to $58 that I would be watching. Let's take a look at Square. Went over Square yesterday on Spaces. This one is just, it's just absolutely beaten down. I mean, you can see there's just no relief, right? No relief, no respect for Square. So you could see, let me change that to the 1382. Yeah, this one, so this is looking like potentially, you know, an A, B, C retracement. Right now, that's what it looks like, right? And why, you know, 1, 2, 3, 4, 5, and you're getting a series of higher high, higher low, higher high. So I want to see that next low that we get. I want to see it hold this channel. I think that's going to be really important. So yeah, we did close over that 50-simple moving average today, and I think that's positive. And we did get a break over this prior low and these prior lows and this prior high. So I think that's positive in the short term. Squeeze looks pretty good. RSI looks pretty good. I think you could see a move back up to 81.69, maybe up to 86.49, but I don't know. I mean, it's so hard to say. Earnings are on August 4th. That looks like it's going to be not this coming Thursday, or not tomorrow, not next week's Thursday, but the following Thursday after that. So maybe we're getting a little bit of an earnings run. I would say from a trading perspective, I think there are better names out there to trade. If you're looking to get in from a longer term perspective, again, you know, when you look at these names, let's just go to the weekly chart real quick. This is really telling the story to me. You know, it's disgusting. Okay. Now, what this could look like, we come up to 83, and this could be a massive head and shoulders. It could be, right? Or we could be building the base of our right side here on the way back up. It just doesn't say anything good to me. Now, the one thing I'm seeing here, you're getting positive divergence, right? So you're getting a higher low on RSI while price is making a lower low. So that's a good thing, right? I don't know if we saw that on the daily chart. Yeah, I think you see it here a little bit too, right? So there's your higher low on RSI. There's your lower high on price. That signaled this rally right here. So yeah, I mean, this rally can definitely continue. I just feel like Square, from a stock perspective, is still relatively weak compared to what everything else is doing right now. So just keep that in mind. Let's take a look at ZIM. So ZIM came up not too long ago, I think yesterday or 2 days ago. So I had initially had a trade alert that went out in March because the shippers looked really good. But ever since then, right, it's just been nothing but down. Now, this big move down, this was a dividend. So I think it lost $17 of the move just on the dividend. But ever since then, big move to the downside. Now, what this does look like to me is a potential ABC retracement. So we have A, B, C. We don't really need these levels right here. So let's just take a look at where our extension terminated. It terminated right at that 1272. So that's good. Okay. Now let me do one more thing. Let's see. Is this move contained in parallel lines? Yeah, it looks like it is. So this, to me, looks like potentially a counter trend move, meaning the trend is still to the upside, and this is just an ABC retracement to the downside. Counter trend, the trend being higher, right? So watch for a move back through that 50, better back through the 200. I'm not saying don't take the trade here. You certainly can. I just think anytime you're taking a trade under the 50 and under the 200, let's see where that 21 EMA is. Yeah, we just broke through that 21 yesterday. So I just still feel like this is a weak name. And I would look at, you know, maybe other names in the sector, maybe an STNG that has been showing a lot more relative strength. Now, STNG is a shipper, but they ship petroleum products, I think natural gas and oil. So look at how much more, look at how much stronger STNG is relative to ZIM. So this is where you need to start diving into the sector and understanding where the relative strength is in the sector. That'll give you a better understanding of where your eyes should be in terms of that sector. Let's take a look at SD, SandRidge Energy. So it doesn't look like I've charted this one before. So when I see a new name, the first thing I do, I go up to that weekly chart. So this one looks good, right? Nice big move to the upside. Let's see if it's contained in a parallel line. Well, it looks like it's starting to fall out of that channel. So this might be starting to consolidate. Now let's go back to the daily chart. So I don't like this. right? This looks to me like potentially a head and shoulders, right? Your left shoulder, your head, your right shoulder. Where we're probably wrong would be back through, maybe $20 to $21, like this range right here. Generally, I want my head and shoulders to be, or my inverse head and shoulders to have symmetrical shoulders, right? So it would look something like, maybe a move like that, right? So if I see that starting to form, I would not, I would look to maybe short under here, back down to $14. But if we get a break over 2024, then you could possibly target these highs at around $27, $28. All right. Let's look at, so Ben, you said you missed Oxy. Let's just take a quick look at Oxy. So yeah, Oxy's looking pretty good. I think oil and gas in general is starting to turn back up, which is interesting, right? Because it's turning back up with the market. So, we do have we got a TTM squeeze setting up. That's a slingshot squeeze. We did break over. This is why I put the trade alert out on, because, it did look pretty good. We got 2-day breakout over the downtrend line, and we did get that close that I was looking for over 63.08. So I think this has room up to, possibly up to about $70, these highs right here. And then if we could break through that, then 72.37. But on energy names, I always want to be a little careful. I want to be more cautious because they're a lot more susceptible to the news cycle. So just be cautious when you're playing the oil and gas names, considering that we've already made a pretty big run, and this potentially could be setting up with a head and shoulders, right? Left shoulder, head, right shoulder. I want to see this big breakout here. We have earnings coming up, looks like in 2 weeks. So just bear that in mind. Okay, Workhorse. Whoa, I haven't seen that name in a long time. Wow. All right, so it's been a while. So let's go up to that weekly chart. Let's remove all that stuff. And so from a weekly perspective, it looks like we're breaking through that 21 EMA and closing through it. Again, this is a weekly, so still got a few days or 2 days left in the week. So want to see if we hold those levels. So that would be a good weekly breakout. And yeah, I mean, this is looking, it's not looking bad. I just don't love the company, right? So look at the resistance here, back on 362. He stopped perfectly there today, okay? So it looks like a squeeze tried to, or is firing off today, or fired off today, but RSI is getting into overbought conditions. So you got to be careful. You also have this, this falling 200 SMA that we have not tested yet since we lost it back in March 21. So you just want to be careful on this level here. Be careful on the 200. If we get over the 200, maybe there's a trade there. If you get over the 200, you probably could see a move up to 535, possibly a move up to 728, and then maybe 825. Those would be the levels I would watch to the upside. I should have went back out a little more, maybe up to 736. I think that will be your bigger test. But first, you got to get through that 200 simple moving average. And then, of course, August 8th is earnings. So you've got about 2.5 weeks on that. So, all right, we are coming up to 7:45. So appreciate everybody that turned out. And for those of you that watch the recording, certainly appreciate your time. I'll be back in 2 weeks, but for my members, I will see you all tomorrow morning. Again, I think this market is very tradable. We just have to exercise proper risk management, watch the tape, watch your levels, make sure you're setting your stop losses, and just respect this bear market rally. Keep in mind, we are in a bear market. So there's no ifs, ands, or buts about that. And that's not going to change until the macro environment changes. Once we start seeing the macro environment change, then I think, there'll be better opportunities to go long. But regardless, bear market, no bear market, there's always going to be relative strength in the market. And that is my job to find it. So I appreciate you all. Thank you so much for your help and your support. And I will catch you all in the markets tomorrow. Have a great evening. And hey, listen, it hit 100 degrees in New York today. So wherever you are, I know Raina's probably laughing. It's probably like 100 degrees every day. But wherever you are, just stay cool, be safe. Catch you in the markets tomorrow, everyone. Bye-bye.